Okay, today I'm going to talk about trading psychology, but in this one, I'm not gonna repeat like many videos or YouTubers or website information or psychological articles and all that stuff. I'm not gonna repeat all those, because if you've been trading for some time, you already most likely know about most of the trading psychological steps and rules and etc., right? We all know that we gotta be patient, we gotta be not to greed, we gotta be control our emotions, we gotta be respect our stop losses, respect our daily loss limits, and etc. This is like all we are fighting against each other. All those stuff that everybody most of the time we already heard about it, already knew about it. It's already written on it everywhere, but still the overall result is same, right? Most traders are losing. So most traders are already know those psychological steps, what to do or what not to do, but still, yet most of them are still losing. When you are on that trade and then you're already telling yourself, man, I know it, I should just stop trading, or I know that now I need to go, I need to leave this table, I shouldn't be trading, but I'm still trading anyway. And I know that I'm gonna lose the account, I'm gonna blow this account, but I'm doing that anyway. I know that I shouldn't be entering here, but I just entered. I know that I shouldn't be doing that, doing this and doing that, but I'm still doing it. So the problem is, to me, is like, it's not the thing that the people doesn't know what to do, like theoretically, right? There are already steps what to do, what not to do. When you have your max loss or daily loss, then you should stop trading. When you are like a tilted, then you should stop trading, right? You need to enter a good risk to reward ratio, so you shouldn't be trading, right? You need to wait for A+ setups, but if you see not A+ setups, do not enter. But still, the traders most of the time mostly are do the opposite things. So to me, all these psychological lessons, courses, videos, and all that, they are just giving information, but that's it. That is not helping too much. And I know that each individual is different and each person can be applying these differently, but most of the time these psychological rules, even though we all heard about them or we all know about them, we are not applying them. So there is something missing. So there is something that we are not doing it, that is not working out for us. So this is not the answer here. I think that knowing all this is not gonna do any good if you're not applying or if you're not doing it, right? And if that was that easy, too easy, then the overall result, trading results that people are losing or winning, it will be opposite, right? Like 90, 80 people will be winning and maybe 10, 15 people are losing. But now it is the opposite. So that means the psychological rules, psychological teaching has very little effect. I'm not saying those are wrong or right. What I'm saying is here, knowing all those or having all those information already, it's not gonna change anything too much. So what is missing? So what is the thing that we are missing and it is preventing us to make money with trading? So in my opinion, in my personal experience, from what I see and what I study and what I come up with, that's what I'm gonna share. And of course, this can be still click for some people, and for some people, it might still not be an answer. So I'm just gonna explain how I interpret all this and what I believe that it can be helpful for traders to become more successful in trading. And with all this psychological teaching, the videos and hours on YouTube videos and all that, if they are not working too much effectively, and I'm not gonna bother you again with the psychological terms and like 10 steps and 20 steps and do this and do that, right? But what I'm gonna do here is I'm not gonna repeat those. Instead, I'm gonna tell you 4 or 5 things. I'm not sure exactly 4 or 5, but I'm gonna tell you that those 5 things, if you pay attention, I'm pretty sure that it is gonna help you a lot, okay? And I'm not gonna discuss about 20, 30, 40 different psychological steps and terms and all that stuff. If you want to do all that, it is already out there, there's many of them. But in my opinion, it's not gonna do anything. You're only gonna know about it, but it is not gonna do anything in practical trading. So you need to figure out how to use those information and make it into a practical habit for your trading. Okay, so here is the first thing, the number one, the most important thing for me. Okay, after all those years, after all that things that I done through, a lot of mistakes, a lot of losing, a lot of stressful days and nights and all that, I come up to the conclusion that the number one thing that a trader needs to pay attention is this: you need to slow down. What I mean by that? What I mean is stop taking 50, 60, 180, 20, 30, 40 trades in a trading day, okay? Unless you are a very experienced trader, like you had many years trading experience in front of the computer, and you are very well professionally trained person that do this every day, long time, and you are making money. Then if you are not that person, then you have no business taking 30, 40, 50, 60, 80 trades in a day. Okay, my point is this. Most of the time, the retail traders are against the algos, the computers, right? And then the big banks, the big guys, they have their levels, and then they just move the things in and around. So we are not competing with those directly, right? We are trying to be on their side, but mostly our fight is against the computers and the algos that they do fast scalping, right? They do small range scalping. It can be for small for them, but still it is pretty good size for us because, our pockets are not that deep for most retail traders. So we are fighting against the computer. So as a human being, in my opinion, it is very, very hard to compete with a highly sophisticated software and computers that knows pretty well about human nature and emotions and what humans do in different scenarios. That they already know, they already programmed, they already coded in their algos that they already expect what to do, what not to do, right? So when you take 50, 60, 80 trades, you're just giving them chance every time you enter a trade to beat you. Because most of the time they're gonna win. Either they're gonna run your stops because you can't handle it anymore and they can. You just see, man, looking nice here. We're just like perfect. It is gonna go up and you just enter and then they just pull back into the range. Or you're just trying to buy the bottom of the channel and then it just flush down and then it just comes back up after they take you out. All this sounds familiar, right? So all these things is actually you are fighting against a lot more highly intelligent than yourself. So if that is the case, that you are not that pro person that have many years experience, and if you are not that, you are just a retail trader that started a couple years ago or a couple months ago, that you have no business entering that many trades every day. You need to calm down. You need to relax. You need to stop rushing yourself that you're gonna make money. That is also related with the greed, right? On those psychological videos, they're talking about the stop being greedy and etc. etc. This is what it is, comes to that greed, right? You need to stop thinking that you need to make that money. You need to stop thinking that rushing yourself every day too much, right? To make money, to be consistent in this trading. You need to stop that. You need to stop pushing yourself in that sense. Yeah, you need to push yourself to become better every day, but don't mix things up. So you need to give this process a natural way of doing things by itself. You should not push it to be successful, to make money, to get richer, to pay the bills, to pay the rent, to do anything with that. Okay? If you are thinking like that and you are sitting in front of the computer with those thoughts, then it is most likely you are gonna forcing too much and you are gonna entering trades and more than what you're supposed to do. So that brings to another question. So what should I do then? If I'm not gonna take 50, 80, 60 trades, then what should I do? We're just gonna wait and sit and just take one trade or two trades a day? So here's what I'm thinking. Every trader should do some type of filtration for a good quality setups. Okay, you can call this a strategy, you can call this a rules, you can call this whatever you are calling it. It really does not matter what it is also. Because the strategies, the rules, the things like these are not the thing that is gonna make you money or make you become successful. These are just gonna be the tools for you to become successful. The A, B, C, D, whatever that is, X, Y, Z rules, whatever that is, it really does not matter. As long as you do the enough back testing with it, you do the experience on the live markets for some time, and then you will keep daily checking out for some time that those setups are the ones that is gonna most of the time telling you a high quality setup areas. So you need to find something estimatical strategy like that. So this is gonna do 5 things for you. The first and most important is it is gonna filter you. It is gonna stop you entering too many trades every day, entering very poor quality setups every day, entering like crazy every day. So that is what it's gonna do. This is the most important thing. The purpose of these rules and strategies and the setups, that is gonna slow you down. It is gonna filter you out. It is gonna preventing you to go crazy with the market. Okay, because that is what the algos and that is what all those softwares that are coding and computers against retail traders, that's what they want. They want you to enter too many trades as much as possible so they can trick you on every time you enter. So you're gonna expose yourself to the market not too much. Less is the better for you. You need to seek out the good quality setups with your back-tested strategy, and then you're just gonna wait for those setups. Okay, so the first thing is you need to slow down and you need to wait for your signals, for your strategy, for your rules to tell you, hey, this can be a good setup. Okay, the first thing is this. You need to do this. This is the first and main important thing. Okay, so the second step, this is as important as the first one, because Without this one, the first one has no meaning. It is not gonna do any good if you can't do the second one, okay? So for the second one, again, like on the first step, you need to find a strategy, rule, XYZ, ABC, whatever that is. It really does not matter. You need to find something that is gonna keep you in the trade. When we enter the trades, then this second one, you want to stay in the trade as much as possible. The rules are, again, you can backtest it, you can, whatever that is, the rules itself, the strategies itself is not too important what it is, okay? ABC works, XYZ works, or whatever that is, it can work for different people, different strategies, okay? You just need to find it, whatever fits your personal trading behavior. This can be like following a moving average, this can be following a 2-bar behind, this can be following a 21 moving average, this can be following an ATR level. Whatever that is, that should stop you taking your profit just because you feel like you need to take that money, or you just because you are afraid, just because you are scared to not to give that money back. Those shouldn't be a reason. The reason should be is this, for you to exit that trade. When the charts, when the bars is telling you, okay, now whatever it is you are in, it is either stopping, not going anywhere, or it's gonna go sideways, or it's gonna go turning against you. So whenever you see that, the signs from the chart, that should be the reason that you need to exit that trade. For the beginners, for the traders that having problem, for the people that is starting, for the people that they wanted to be consistent for some time, a little bit longer duration trades should be better for those traders. So on the second one, you need to stay as much as possible after you enter your A+ setups. You have been maybe waiting 30 minutes, 1 hour, couple hours before entering this trade. What we are doing here is we are limiting ourselves to exposure to the market, and when that time comes in, you need to take full advantage of it. So because if you don't take full advantage of this time, you know what is gonna happen? The risk-reward ratio is gonna kill you, okay? What I mean by that? So you have been waiting and limiting yourself to a good setups, okay? And one came in and then you enter. After like a little bit time, you scared that there's gonna price turning back on you. You just gonna decided that you need to exit the trade. So you took the money, let's say you took $100, okay? And after that, did the price pull back and then did another $600-700 more. That where you supposed to stay in that trade. So on the second trade, you waited and it seemed to be a good setup. Everything is checked in, you entered, and then your stop loss hit, okay? Even if with your waiting your A+ setups, you still gonna get losing trades, of course. Nothing is 100% with this trading. So you need to expect the losing trades as well. But the problem is here, you just made is the prior trade that you just took your exit too early. Your risk to reward ratio is pretty bad, and that is affecting the other trades. You took a loss, let's say $400. So if you had, let's say, took a profit on the prior trade, $800, let's say, and you took a full loss on the second one, $400, you are still $400 in profit for the day, right? But now you took a $100 profit and you took a $400 loss, and for the day you are down $300. So if you keep doing this for a longer period of time, over time, and this is gonna not let you be profitable in the long run. So the lesson here is when you are in a good setup, when you are in a good trade, try to get as much as possible from that setup, from that trade. Okay, that is gonna help you for the long run. That is gonna help you, your winning are bigger than your losing trades. That is what you want. You want your winners a lot more than your losing one. Okay, so this is the second and the most important thing. It is as important as the first one, because without these two, the one only by itself has nothing, it's no good. So you need to do these together. You need to wait for a good setup. Once you enter it, then you need to wait for a good exit and stop exiting too early because you are afraid of giving back the profit, or you are afraid of losing the money, whatever that reason is. Even if just do these two things, okay, I am pretty sure that your trading is gonna improve way more. So first, these two things is gonna be more related with your behaviors and psychological trading and all that, okay? Because like on the first step, you need to stop rushing, pushing yourself that you need to make money, you need to be successful, you have to do this, you have to do like you, because this is affecting badly with your trading because it is pushing you negatively, right? Most of the time it is affecting you negatively, like it is making you entering too many trades, entering too bigger size, or not paying attention your risk reward ratio, and you just push you to make money. Things happen like in a short period of time. That urgency, that being successful, that urgency, that making money to do other things or to pay other things, or because whenever you try to push yourself in that sense with trading, it ends up not too good. Okay, so that is pretty much the first step, is slowing down. That is what it means for me. You need to be able to slow the trading process and just go to your target slowly but surely without going crazy with the market. And the second one is mostly related with like being scared, being afraid of losing, or you don't have trust within your system or strategy, or you just too afraid to lose money. Emotionally you are not too strong when you are entering a trade and you're just exiting too early, or the money is too important for you at that time that you don't want to lose it. You just want to get some money and you just want to keep it all the time, right? That you just not willing to see that drawback against you or losing that P&L. So those two rules are very, very important. Also very, very related to psychological terms that you will probably see on the other videos, like hours and hours and talking, but in a sense, summary, that is what my understanding is pretty much. And this is more like putting all those psychological terms into a practical aspect, if you would think about it. That is how I put it in. Slow down, stop taking too many trades, wait for a good setup, and when you find a good setup and enter, stick with it till it shows the other way. I also want to talk about a few other things. These are more like a technical trading related rather than more psychological, but these are also very important and can be a good tip. Try to put yourself with a direction of the daily trend. So if you are, for example, trading with 1 minute, 2 minute, 3 minute, or 800 tick, 1000 tick, or whatever that you are trading with, your entry chart, it is always better to anchor yourself, keep an eye on with a bigger time frame chart. Like this can be 5 minute or 15 minute, or let's say for the tick chart, like 4000 tick chart, that you need to be in the direction of that little bit higher time frame than what you are trading. Okay, so that way this will eliminate some of the unnecessary trades. Okay. Because let's say in the 5 minute, the trend is up, like there is an obvious uptrend, and then you see the moving average following. It will be more smarter to look for long entries, and even if you see some short entry setups, then that is not a good idea to go against with that unless you see it happen. So that way this will eliminate some of the trades that you are gonna take against the trade. This will also help you to not to get trapped or stopped out, those kind of things. Also, it will help you to find a bigger risk reward entry trade. So this is important. Just think about a bigger time frame than your entry chart. I'm not talking about like very bigger time frame. Like there is no point that you are looking for a daily or weekly chart and then you are making a decision while you are trading in a 2 minute chart. Okay, you need to go maybe one higher frame or one kind of like that. So if you are trading, let's say 1 minute, 2 minute, the 5 minute can be a good higher time frame for you to check the trend. So another point is you need to know your levels. Okay, you need to know your important levels for the day, prior day. Okay, prior highs, prior lows, prior overnight high lows, prior open, and for the high of the day, high of the low. Okay, weekly low highs, monthly high or low levels. Daily chart, you need to look at it, what you can expect for the daily bar for the day. So you need to try to get an idea for the day before you start trading when you are looking at these bigger time frame levels. So if you are in a channel on a 4-hour chart or daily chart, then if you are getting into that channel, you can expect a reaction from there, right? It can be a bounce and then turn back or break through that. So you need to be aware of these levels. It is very important so that you don't get surprised on the smaller time frame that you are trading. And the last thing is, I will say, you need to pay attention to the shapes and the highs and lows, higher highs and lower lows, etc., or the channels, upward channels or sideways channels, down channels. You need to pay attention these channels, and you need to pay attention these areas that, let's say if you are seeing a down channel, then it is a good idea that not try to enter a long position on the upper part of the channel. It can possibly do another return to test the lower channel, right? But unless if that is a breaking out with a strong bar and the other things are confirming the location, then that will be different. But till then, you need to respect the highs and lows. You need to think about always buy the lows, sell the highs. Most of the time that works, and most of the time the breakouts fail. So you need to kind of keep that in mind and don't be too fast to enter or rush yourself. That is what the algos and the computers, they want you to do, right? Because they kind of show a little bit, they get you excited, and you just enter, you just hop in. You're just afraid that you're gonna miss that entry. You just enter at the top when the bar shoots up, and then they just pull back, and then they just hunt your stop loss. Those are the few things that I would say, those are definitely gonna add you extra confirmation for your setups. First two is the most important. Slow down, you need to be picky, you need to have a system in place that is gonna filter you so that you are not entering crazy in the market. And the second one is, once you enter it, you need to find a way to stay in the trade. I hope this will be helping you in some way, because these are really helping me to stay in the game and helping me to be more consistent with my trading. I will see you on the next one. Thanks so much.